Preparing to live stream the meeting.
This meeting is being live streamed.
What I told you? It's setting up. Let's figure this out. I'm gonna try it.
Are you recording also?
I'm about to.
Let's go, Steven.
All right, let me hit record and let's go.
Waiting on you.
You're always waiting on me. A little technical error.
Welcome back to another episode of the Brutally Honest Loan Officers Podcast. I am Derick Brown, here with me, my co-host, Steven Brock. Say what's up, Steven.
What's up, Steven? Oh, so this is our first episode that we are streaming live on YouTube. Everybody says, oh, we must edit all our stuff. And this is proof that we do not. I think we edited the first episode. Is the only one we ever edited.
Yeah.
Yeah. And we're like, yeah, this is too much work. Like
that was 109 episodes ago.
Woo!
Just saying.
Just saying. We just do it. So
how was your weekend, man?
It was good. Lots of football, not the NFL. So Joey has 2 leagues of flag football. So we play at school on Saturday, and then Sunday for the NFL. The NFL has a flag league down here, so we play for them. And so I'm a coach. We didn't have this kid last game. We had this, I'm not gonna say kid's name on here, that it's not my kid. Playing with us on Sunday. And it's basically you hand him the ball, it's a touchdown.
And you score.
Yeah. So it's like
flag football, or
it's flag football, and it's developmental. So like they're all learning, and we're an 8U because Joey's 9. So he's an 8U, but they didn't have enough kids for 6U. So we have 6-year-olds too with us, and a 5-year-old. We have this kid that's really good.
Went like 8U. That's usually 8 and under.
No, it's 8 and 9, up to 9 and under, because then there's 10U is the next one.
They gotta come up with a different number of it.
Yeah, it needs to be 9U,
9U,
and 11U, and like that's how. Yeah, but so we have a 5-year-old, a couple 6-year-olds, and then 7, 8, all the way there 9.
And then the 12-year-old that you hand the ball to.
No, he's only 9.
Have you seen his birthday? Have you seen his birth certificate?
He's 9, but
he's gonna be one of those kids.
He's a travel soccer player. Travel soccer player, so he doesn't get winded. And then it's like 2 plays, it was touchdown. We get the ball again, touchdown, and I'm like, the ref's looking at us, and I'm like, hey man, you gotta come sit down. Like you can't play all the time.
No, run up a score. Let those kids know. Like this is real world. Sometimes you're gonna get beat.
But then okay, we're on our own end zone, and go, because it's like you get 4 plays, 3 plays, then you can decide to punt, but you gotta get at least to the 50. And they're going from sideline to sideline is how the field is. So that's how whatever that size is of a regular football field. So you gotta get to the 50. Like we on first and second down got like a half foot. Like once this kid's not in, I'm like, it's 3rd down and we're on the back of the hole. Like, hey kid, go back in there. Big handoff to him, and he just runs it all the way.
That's
I was like, and then he was playing defense because we have him on defense, and I'm like, hey, you're not allowed to rush, but like these kids can't really throw. They're trying to throw it, but it's mostly like, hey, they're gonna hand it off. I'm like, as soon as they hand it off, you go get it, and it's like -2 yards, -3 yards. I'm like, all right, back up.
So the kid knows how to play football.
He just knows how to run and go right to the flag. Like he could just run. He's just super fast, but it was good. It was fun. What about you?
We had some soccer practices. Audrey had soccer practice Saturday, Sunday. Sunday was a little bit of a shit show. Am I allowed to cuss if we're live streaming? What's that going to do?
What? It's the same as, I don't know. We'll figure it out.
All right. We've already gotten flagged. We
are the brutally honest loan officers. So.
Yeah. So Sunday morning, we're having breakfast as a family, and like I noticed the sprinklers are still on. Sprinklers are supposed to go on at like 4 a.m. So I'm like, time change. I don't know. So I go, and then I just like turn the little thing to off, and then come back inside. Then I don't go check. I just think it did that because it's outside the backyard, and the front yard is where we have our sprinkler system. And so then Tony's like, didn't you turn them off? And I'm like, yeah. So then I go back out there, and it's off. So then I just unplug the irrigation system.
Yeah.
Doesn't stop. And then I look, and our front yard is flooded.
Oh, geez.
flooded. And I'm like,
Now,
I
is
mean,
it on well water or like
yeah,
city?
it's on a well.
Okay, at least it's not racking up your water bill.
Yeah. And so, but it was like super annoying. And then like, I got to get out the door because I got to take Audrey to soccer practice. And then straight from there, we're going to church. And I just like, I don't know what to do. It won't turn off. So I got an irrigation guy that I know and texted him and I feel bad. It's Sunday morning or whatever. He's like, I
Yeah.
can be there in a little bit. And so then by the time he got there, it did shut off. I'm not sure what shut it off or whatever. And we got some bad solenoid or something.
Yep. I'm gonna say it's a cylinder only because it happened to me.
Yeah.
It happened to me at our old house.
Yeah,
Like
but like, and one of the heads broke, and so it's right there on our front porch. It is just
a
a
geyser.
geyser straight up to the roof, and like you can see, like we've got tongue and groove, like right there, and the wood is just like almost black because it's so wet and it's just dripping. And I'm like, that's it, man. Like, come on, like, there's
You gotta
always
get
something.
some 30-second cleaner and spray on there so it doesn't.
Yeah, I don't know. So
Uh,
it's coming back out today, I think, to finish fixing everything. I just wanted it to turn off.
yeah.
I was like, buddy, we got enough water for a week. We're we're good. So, and then we got rain last night. Perfect. But
At least it
other
didn't
than
happen when
that,
it's gonna
a
freeze.
wonderful
up there.
weekend.
That's good.
But all right, so today's episode. It's tax season.
Woo!
So we're going to talk about taxes, specifically refunds. Whether you get one, you don't, why, tax withholding, we're going to dive into that a little bit.
We're gonna first state that we are not CPA, so our tax advice is purely
Or tax preparers. We
Yeah.
are mortgage loan officers.
we're
But
gonna
we
tell you
deal
from
with-
ours, we see tax returns all the time and what we see on them and what it looks like.
Yeah. So just breaking it down, we are not CPAs, we're not tax preparers. This is not tax advice necessarily. But yeah, we're going to dive into a little bit of strategy and just smart ways to think about your refund, your withholding, debt, saving, and how that kind of relates to home ownership.
Did you watch football this weekend?
It was on in the background a little bit. Didn't really watch too much.
They had, I can't remember the two actors, but they did the half-weight insurance. And it's like,
I don't know what you're talking about.
They're just like some joke, like, but it says there, like, if you don't know they're actors, like you would think it's a real insurance commercial. They're like, oh, we just kind of halfway get you there, but it's like the bottom it says this is for entertainment purposes only. So this is for entertainment purposes only on how we're doing your taxes. All right. Well, so a lot of people get excited with a big refund check, right? Like, oh, I'm gonna get all this money back.
Yeah, because
what is it
like
actually?
a bonus.
Yeah, but what does it mean? What does it actually
if
mean?
you're if you are a W-2 employee and you're getting a big refund, it's because you overpaid throughout the year.
Yep.
That's it. Your tax withholding that you have filled out with your employer is withholding too much taxes.
Yes.
If you're just doing a straight W-2 and that's your income on your tax return, and it shows that you get a refund.
Yeah. So you basically gave the government throughout the year an interest-free loan.
Right. Why do you want to do that? Listen, we're trying to keep money. I'm trying to keep as much of my money in my bank account.
And I get it. Some things they only get it to a certain point, and then there's not much else your company can do that's running it. It's like, hey, married, filed single, filed married, filed jointly, filed with kids, out kids. Like there's only so much they can do on there. And then they don't know like what, hey, I'm taking childcare off, I'm taking these other things off. They don't get that. So that's part of the reason why you get refunds. But I have seen people where I'm like, this shows that you're filing single and you're married. And they're like, what? Like on their pay stubs. And I'm like, you might want to change that because your tax is going to change how they take them.
Right.
Oh.
But yeah, so the goal isn't necessarily a big refund. It should be efficiency. That's what you should be aiming for. At the end of the year, if you could just owe zero and you get a refund of zero, you've done things perfectly efficient.
Yep. So it's all about withholdings. What are they withholding? That's what we're looking at. So, just like I said, some people it's good because it forces them to save money.
Yeah, if you suck at saving, maybe you do withhold a little bit more.
Yeah. You're gonna automatically get that refund back. So that's great.
Yeah. If you're the type of person that, let's just say you get paid weekly and you make $1,000 a week. You get paid
Mhm.
on Friday, and by Sunday you've got $5. Like you need to rethink what you're doing with your money. But maybe that's the type of person that does withhold a little extra because
Mhm.
they're not going to be able to, pay the IRS if they do come to owe a little bit.
Yeah. Yeah.
You know,
But there is a danger of holding too much now, right?
just
You
missed opportunities.
yeah, exactly. Missed opportunities. All right, so you are giving the government extra money every single paycheck, and it's interest free that the government doesn't owe, the government's holding whatever, and that's making no money. So that's one missed opportunity. You could have put that money into some kind of investment account where it's making money, but also you could have used that money and paid off debt that is costing you interest.
Right. Well, I mean, think about like, oh, I'm getting a $3,000 refund. Okay, that means that you overpaid by $250 per month. $250 per month going into a brokerage account that follows the S&P 500 could be awesome.
Yeah.
So, I mean, when you're looking at investing and compounding interest and stuff like that, the sooner you can invest, and that's where people are like, I don't have money to invest. You might. You actually might. And
Mhm.
this is where working with a CPA is huge. And I mean, unless you're currently renting and you have a simple W-2 job, yes, you could probably file your tax return yourself. You could just go to, H&R Block or you use TurboTax or whatever,
Yeah.
pay the small tiny fee and do it yourself. But once you start getting into owning assets, having any type of side business, owning a home, I just really think you should start meeting with a CPA so that you can talk tax strategy.
We have, even when my wife and I were both W-2s, we had a CPA look at everything. And I mean, if it's a simple tax return, it's only like $400 or $500. And
Right.
they figured out, I mean, yeah, of course yeah, hey, I'm self-employed and all that, like that adds more into it, what they need to do on there. But you can get a good CPA. And I would say not one from like H&R Block. There's good CPA firms. Go find one from there, not just a cookie cutter corporate one, because they're just filling in the blocks and going with it.
No, you want somebody that's going to ask questions and get to know you and figure out like what is important to you in the way that you file your tax return.
Yep, exactly. And I would try to find one that's forward thinking. Like, yeah, they can't fix what you did in 2025, but once you're talking to them, can they set you up so when you're doing stuff during 2026, that tax return that comes the next year looks a lot better,
Right.
forward thinking. All right, so let's do a scenario. You file your taxes, you get a $4,000 refund. What is one of the smartest uses that you can use that tax
Pay
refund?
off high interest debt. That'd be my first like
Yep.
go to. If you have credit card debt, man, like $4,000, feel like you could throw a big chunk at some credit
Yeah.
card debt.
I mean, these credit cards are 20-30% interest. They're huge.
It
Like
is.
Nikki got one in the mail, like, like you always get like, oh, you're pre-approved. And she was like, somebody like report, like run a credit card for me? Like what is this? But it's one of those like, then you read the fine print and it's like, well, you're not actually pre-approved. You're pre-qualified because we think this, and this. And like, you got to file it and then we'll get it. But then I looked, you flip it over and it's like APR 38%. And I'm like, holy
Dude,
crap.
like so think about this. As of late 2025, the average American credit card balance is approximately 55.95 to 65.19. So basically $5,500 to $6,500. Call that an average of 6,000.
Wow.
So if you had $4,000 refund and you could throw all of that at it, and you went from $6,000 down to 2,000. Oh man, like you're almost credit card debt free
Yeah.
if you're an
That's
average
amazing.
American.
There you go. So it's not, I think it's one of the best. And then hopefully you learn from, hey, racking up your credit cards and keeping them down, because then you can start, okay, hey, I was spending $300 on my credit card every single month. Now I'm spending, because I got it way down, maybe 50. Or maybe you're still spending the 300 because you're going to knock out the rest of your credit cards
Right.
there. Or you're taking a little bit of that money, like, hey, I'm going to put 200 to credit cards, and I'm going to put 100 to investments.
Well, and then somebody's going to sit here and say, well, if they were to invest that, okay, yeah, I get it. Compounding interest, I just mentioned it, but there's no investment that beats eliminating bad debt.
Yeah.
Just saying. So if you can free up that debt, whatever you were paying monthly towards your credit card, and half the time people are paying the minimum balance, so they're not even like dipping into what's owed. They're just paying like the interest portion of it. And that balance is just sitting there, maybe even growing. If you can eliminate debt, then take what you were paying every single month and invest that.
Exactly.
So, I mean, it might not be exciting, but
Not exciting, but financially way better. So what's
right.
another big one?
Um, I've had several conversations about it already this year. Using a tax refund as a down payment.
Yes, I think this is a really, really good one to do because people are like, oh man, I need extra cash or whatever. Like I've had people like, oh, I can't use that money for a down payment. I'm like, why? And they're like, because it's just a huge deposit in my account. It's got to sit there for 60 days. And I'm
Sourceable
like,
deposit.
and I was like, yeah, exactly. It's a sourceable. We know where is it coming from? The government. Like that's where we can see where it came from. When we can't use big deposits, is you can't source it. Hey, I just put $10,000 cash into my bank account. Where did the cash come from? Like we can't prove it. They're
Right.
basically looking for like money laundering. That's what the government like why they stopped that.
Right.
So this is huge. Even a few $1,000s moves the needle. I have a client right now that we're looking at all the money, and he's like, "Oh, I have gold coins. I have Bitcoin. I have all these different things." He's like, "I really don't want to liquidate that to do it." And I'm like, "Well, when's your tax return? Do your taxes right away." And then he's like, "Oh, yeah, I'm getting like back like 5 grand." And I'm like, "There you go. Use that."
Yeah. See, I have another buyer. She's got 6 grand saved. She's expecting a $5,000 tax return
Yep.
or refund. And so now she's going to have $11,000. She's looking at a $350,000 home, putting 3% down. That's 10,500. She's got her down payment.
Yeah.
Now we've got to make an offer where the seller pays, majority of her closing costs. She's still saving each month. So now like we're at that stage where like, yeah, go look at houses.
Yeah. You can do it.
So I
Awesome.
mean, it really could, like, using it towards down payment could be the difference between renting another year, getting into a home sooner. Steven and I have said this probably 500 times on the podcast that time in the market is better than trying to time the market.
Yes.
So the sooner you can get into a home, usually the better.
Yeah. I know. And that's a little a blanket advice. Like, are there ways of getting in the market and timing it perfectly? I don't. I mean, I have bought my house at a perfect time, but I don't think we planned the market. We weren't watching the
Yeah.
market. We just did it. So yeah, we look back and like, oh, that was a perfect time. But so was the time when we bought our first house and
Yeah.
the time before that. So it's like it was always a perfect time for
People are going to
us.
say home prices are coming down. I don't think they are. Like we've seen a little bit of a correction. We haven't seen home prices come crashing down. Nothing like 2008. And
I'm gonna pull it up for at least our area. Hold on.
home prices were cheaper yesterday. They'll be more expensive tomorrow. Just saying.
That is true. So this is for Palm Beach County. The median sales price. So home prices are coming down, they say. They did nothing. They stayed exactly the same. So with all these people saying, oh, I see all these reductions and all this from 2024, which was probably considered a better market in real estate than 2025, home prices didn't appreciate at all. Now they didn't gain, but they didn't appreciate.
Right.
That's just for single family homes. Let's see where Martin County was the same. Broward County, they went up 0.6, so they went up. Miami went up 2.3. So people think like, oh, Miami is hard to buy in. Well, it went up 2.3. St. Lucie County stayed the same. So people thinking things went down, they all stayed the same or went up. Now they weren't dramatic, but they still
Right.
increased. I'm trying to see what else there might be. Yeah. So and so prices stay the same and they had 5% more closings. So there's still more buyers out there. Yeah, I think what is it? 7 times in the last forgot like since like the 40s, 30s or 40s.
That there hasn't been appreciation now, but if you were to look at like a 5-year span, like within those time frames,
Yeah.
I think 2008 is the only time that prices dipped and didn't come back like the following year.
Yeah.
It
Yeah,
took a little bit
the
more time.
recession, the Great Recession of 08, 09. I think they all went down for a little bit and then started going back up. Like
Yeah,
it took it several years. Like, yeah, those seven, I think three or four of them are in that recession period of time.
right.
All right. So
Third scenario.
most people want to just spend it, right?
Do it. Just spend it.
Just spend all that
Screw
money.
Derek and Steven and their advice.
They said
I
it was for
want a
entertainment purposes,
PlayStation.
right?
This is a down payment on a car I can't afford. Let's do
uh,
it. Let's go
yeah.
on a cruise.
Hey, I'm going on a cruise soon, so
You can afford it.
yeah,
Just saying. People want to spend it, man. And like, oh man.
well, just
And
split it up.
honestly,
Split
like,
it up.
why? All right. If you're staying up at night, struggling with the amount of debt you have, and then you get this, and it's the perfect opportunity for you to pay off debt or invest elsewhere. I mean, that's what you should do. But
Yeah,
I don't know. I just don't waste it. Now, if you're going to spend it, fine, but don't waste it.
yeah.
It's where like the problem is the refund disappears and you don't remember where it went. Or you did it on something that just adds more debt to your plate.
Yeah, exactly.
Like,
So
let's not do that.
yeah, I think if you split it up, hey, a little bit into say, maybe half of it goes to savings or paying down debt. Maybe you put something towards a goal, and then you say, hey, this money's fun money. This
Yeah,
percentage, 10, 15, maybe 25% of here's fun money. I'm just gonna go have fun with it.
right.
Okay.
So like we were talking earlier, what? So $5,000 tax return, we're gonna take 1,250. That's 25% of it.
Yeah.
$1,250 that you could spend. The rest is either going towards saving for something, paying off debt. I mean, okay. If that's like if you've got an itch that you've got to do something, do a portion of it.
Mm-hmm.
I can't think of anything I want right now that would cost more than $1,000. So
I don't know. I'm trying to think too.
try to enjoy it without wasting it.
And there's not a lot of fun stuff. Like I want to do some pavers on the side of my house, so that's just going to my house. I might put it there.
Yeah, and that's adding value. That would
I
be.
don't know if it's adding value, but I would have a nice little path along my house to the backyard, to the front yard.
I don't know. I think that wouldn't be wasteful in my opinion.
No, I don't think it'd be wasteful. But like that's the only thing I can think of that I would, spend splurge on.
All right,
All
let's jump
right,
into deductions.
deductions. So this comes up a lot, and we hear it all the time. This time of year with homeowners. So most people take that standard deduction, right?
Yeah, what it's single filers 15,750. Married filing jointly is 31,500.
Yeah. So for many households, that means mortgage. So this is like, oh, you're gonna save. You can deduct your mortgage insurance from your taxes. Well, when
Well,
you're
hold on,
taking,
time out. Like your interest, the
yeah, the
interest,
interest, yeah, the interest you
not
have
your
on your
mortgage
mortgage.
insurance payment.
Sorry, yeah, sorry, your mortgage interest. I just used the wrong I word. Interest. You can take that and deduct it from your taxes. They're basically saying we're not taxing you on interest that you incurred with it. But if you're taking a standard deduction, you're not itemizing. So you don't get to take that.
Right.
I love when people are like, oh, it's a tax write-off. Really? I mean, it is if you're going to use it. Most people can't
Right.
use it. I think
You think about 31,500 if you're married filing jointly. That's a lot of money. That's a standard deduction. So if you look at your mortgage interest and a couple other things and you're at 25,000, that's what I'm going to deduct. No, you're not. You're just going to take the standard deduction. And your CPA
yeah,
is probably going to tell you that.
yeah.
Unless you can create other deductions from somewhere.
I mean, your
Like that you
property
can't.
taxes help. You can take that, but that's capped off.
Well, I just pulled it up. So mortgage interest, property tax deduction, mortgage points. So if you bought a house in 2025 and you paid points for a lower interest rate, that can be tax deductible.
Because that's technically you're paying upfront interest. That's what you're doing when you're paying points. So
Right.
It's still mortgage interest.
And then there's also the home office deduction. So if you have a home office and you're working from home for something, you can typically deduct that. So there's ways to do it. Now, also, I mean, I hate seeing this number, but I got my mortgage interest statement, and my wife and I built a home a couple of years ago. We had a higher interest rate than before. and I've paid over $30,000 in interest this year. So I will not be taking the standard
You
deduction.
there?
I will I will be itemizing as much as I possibly can.
See,
And
that'll work.
I have,
So now
well,
you put your property taxes on top of that, you're definitely over
yeah, property taxes went through the roof. Holy smokes.
it.
Wild.
First world problems.
So, but I mean, buying a home shouldn't just be for, tax reasons, but
Mhm.
we're just explaining like there's some opportunity.
Yeah. Yeah. Now, I would say a lot of opportunities come with people that are self-employed.
Yeah.
That's where they can,
If you're self-employed, you have to work with a CPA.
yeah, you should. And then there's that fine line. You go from LLC doing Schedule C on your personal taxes to switching over to F Corp and actually being a corporation and doing that. I mean, liability purposes you should be, but there's a certain point, and every CPA is different. Like, oh, you need to be making 30 grand. Oh, you need to be making 50 grand. Like, when it financially makes sense to switch over, but you have a ton of deductions or expenses to it. The thing is people overdo
They what?
overdo their expenses.
Yeah. Well, that's
Oh,
like I have a small Schedule C, small little
mhm.
side business, and it allows me to, do the home office deduction, and a couple other things here and there. So, but it adds to like the deductions that I'm able to reduce my taxable income.
Yeah,
And so where a normal year I might be breaking even or have to pay a little bit in taxes, I get a refund because of that. Now it's not because I like overpaid my withholding. It's because I created something else that allows me to use the tax code to my advantage.
yeah, exactly. And that's the thing is hiring the right person. You know, we had your I can't think, is it Alex?
Bookkeeper, Alex.
Yeah, him come in and talk to us and like how he if any of you have ever watched that episode or listened to it or follow him, like he always is navigating on how to do it. That
Well, but
that
he doesn't do tax preparation. He's a bookkeeper. So he's working with business owners on a monthly basis of how to better prepare for the end of the year when you
Mhm.
then go to your CPA. He's
Yep.
looking at things on a regular basis, whereas sometimes CPAs, you go and meet with them once a year. I mean, if you're self-employed, I highly recommend talking to your CPA more often than once a year.
Yeah.
And we're not when we're mentioning write-offs too, we're not trying to tell you to go spend money just to create the write-off. Spending $1 to save 25 cents, not smart.
Yeah. Not so
Don't
much.
like that doesn't make sense. Don't
No.
do that. And then there's people that are like, oh, well, we're taking this trip. And if I have a meeting, I mean, yeah, but now you're on a fine line, some gray area there, but that's where you need to meet with your CPA and find out if it really makes sense. Like there's this one story that I love, and it's a realtor in like LA, somewhere in LA, who wrote off a yacht. And then she got audited by the IRS. And the IRS was like, you're a realtor.
Yeah.
What are you doing with a boat on the water as a write-off?
Yeah.
And she pulled the captain's log that said, I mean, every single celebrity that she had taken, and she would take them on the yacht and look at homes, but from the water. And so then like going through this and like the captain's log had every single person, every single celebrity, like, I mean, just
Everything.
like all the details.
It's like her car.
But then, so then the CPA is just like, here you go. And then the IRS auditor, whatever you called him, was just like, oh,
Yeah.
okay. Like, and that's it. I mean, that's it.
So that I mean that's what you
100% perfectly legal. Like, you did it the right way.
write-off should be tied to legitimate business because if the government comes knocking, you have to prove it.
Yeah.
You
And
you
I don't
are
think that
you
they
are
care
you are
about little
guilty
Bob and
until
Susie
proven
Smith.
innocent with the IRS.
Yeah. And like, I think that they're looking for some of those bigger ticket items. I don't
Yeah.
think they're going to flag Bob and Susie Smith because they had, a couple $1,000s in, a little home based business that they're
Mhm.
writing off. But if you forget something that gets reported sometimes and that doesn't add up, that could work,
No question.
or that
Yeah.
could cause them to, pose a flag or audit or whatever. Um, I mean, we filed tax returns. This is years ago, and I used a CPA, and there was some confusion, and I didn't realize that at the time when, like, I took money from my mom's IRA after she had passed away. I inherited a little bit of money, withdrew some of that. But I didn't withhold taxes when I did the withdrawal. And then my CPA didn't ask about the withholding of taxes for it. And so we didn't do anything. And tax, like IRS, looked here, didn't add up. And so we owed $17,000 2 years later in back taxes and penalties and fees.
Oh,
And there's nothing we could do. We filed an abatement to say, like, I'm sorry, we messed up, didn't mean to, we'll pay in full. And we had to pay it in full, 17 grand. Had to pay it in full in hopes that they would eliminate the points and fees and like return that back, and they did not. They didn't.
I bet you'll never do that again.
No, that's why I am anything with investments, liquidation of any, like I bring up everything to my CPA. This is what I did. Here's what we're doing. Tell me what I can do. Like it's just, I don't know. I'm not going to have any confusion again that cost me 17 grand.
Jeez, that's crazy. All right.
All right.
So make sure you're talking to your CPA and looking at everything and disclosing everything. That's the big thing. So big picture, what should people be thinking about during the tax season?
Your goals, long-term strategy, and cash flow is probably what I would say.
Yep.
So those are the three things: goals, long-term strategy, cash flow. Those are the things to bring up to your CPA to figure out how you should file what. And there's going to be times where the CPA just says like, no, like we're going to do this standard deduction. You're good to go. Okay.
Yeah.
But if you are getting a huge refund, does that mean that you've given more money on a monthly basis because of your tax withholding? Maybe you adjust that.
Mm-hmm.
And some people,
again,
like
there's only so much adjusting you can do. There's only so much that the employer that does your payroll can only adjust to. So you are going to overpay. I rather technically overpay than probably owe, because then I don't want to feel like, oh, suddenly I got to come up with more money to the IRS I wasn't expecting. So
but if that's the way you want to do it, just plan.
Yeah, that's it.
Just plan.
It shouldn't be about taxes. Shouldn't be about what happened in 2025 or that the tax year that you're going off of. It should be, what are you doing to set up for the next
year? Yeah.
How are you setting up now? And that's a lot of times if people just look. There's so many CPAs and tax people out there that I feel like they're always backwards looking. Like they can't fix everything in the back, but they can set you up to do the future.
Well, okay. And I know that we're sitting here on social media, giving advice and trying to direct some people. And remember, this is not tax advice. This is just from what we're seeing on a regular basis with our clients, or like what we've done personally. But if you're watching a TikTok and this advice just sounds so crazy, like, oh my God, I didn't know about this tax code. Like, I'm going to take advantage of it too. And I'm going to buy a car and write the whole thing off and do all this. Please be careful and please talk to a real CPA before you go and do that. Like I saw this video one time that I was very interested in, and it was captivating. I was like, oh my God, like I haven't heard of this. And I sent it to my buddy. He's like, yeah, that's if you're a church. And I'm like, oh, well, they didn't say that. Like I thought this was this crazy loophole that's going to save everybody $100,000.
Yeah.
And he's like, no, that's only if you're a church.
I was like,
okay, good to know.
My doctor, and I'm like, oh, I heard about this on social media and this and that and stuff like that about just like taking shots or something like testosterone shots and all this stuff. And he was like, I was like, they say that you should take this because it's not testosterone, so it doesn't do it. And he's like, it's not approved by the FDA. I'm like, yeah, the new stuff always is like that. He goes, you think if that stuff worked, the government would not make them prove it and then make money off of it? Like that's why it's not. It doesn't really work what they're saying it works.
Yeah.
I'm like, yeah, that makes sense. He's like, that's why it's on social media, not actually been proved.
So I do want to say, if buying a home is on your radar in the next 12 to 24 months, now is the time to plan. And we can plan with tax returns. We can look at, your withholding, stuff like that. But now's the time to get started with a plan if you want to buy in the near future.
Yep. So right now, this is, if you're getting a refund or not, this is your kind of reset button. If you're writing a check or have to refund it, maybe you look at how are things done last year and how can I do it differently in 2026.
Yeah,
that's the main point.
Yeah, just be intentional with what you're doing and just work with a CPA, please. I'll tell you right now, when I have like, especially like self-employed borrowers, most of them do use the CPA, but there's a lot that just, oh, I just do a Schedule C. My buyers that work with CPAs, they buy more often than my buyers that don't.
Yeah.
Just saying. So I will leave you with that. This has been another episode of the Brutally Honest Loan Officers Podcast. Thanks for joining us. See you next week.
See you guys.